Think making tax digital sounds confusing? Give me 5 minutes and I'll make it make sense, and maybe even make you laugh. Let's do this. Hi, I'm a technical officer from the Low Income Tax Reform Group, or LITRG for short. We're an initiative of the Chartered Institute of Taxation, which is an educational charity. Our mission is to help people who can't afford to pay for professional advice to understand the UK tax system. Basically, our team of chartered tax advisors take complicated tax rules and translate them into plain English so you actually know what's going on. Our videos give general guidance about the tax system. If you need personal tax advice, we popped a link below to our website which explains where you can get free and paid help with your taxes. And today, we're diving into making tax digital for income tax. And yes, we're going to make it surprisingly fun. Let's go. Making Tax Digital, or MTD for short, is the UK's shiny new tax system for reporting income and expenses to HMRC. If you are self-employed or you receive income from property, this might change the way that you report your tax information to HMRC. Instead of submitting one big self-assessment tax return at the end of every year, you will now need to submit quarterly updates using approved software to HMRC, as well as an end-of-year return to tie everything up. And no, HMRC will not be providing software to help you do this. You will need to pick a third-party software provider to help you submit these tax returns. Choosing Making Tax Digital software is like selecting the right tool from a fully stocked toolbox. Every tool has its purpose. The challenge is finding the right tool that meets your specific needs and does the job that you want it to do. So what's changing? The way you report your income, the frequency you report your income, and the tools you use to report the income. What's not changing is the way you calculate your tax and when you pay it. So don't panic. Your tax bill isn't suddenly doubling. If it was, I'd be the first person running around waving a big red flag. It's just the admin side of things that's getting a bit of a digital glow up. Making Tax Digital only applies to individuals who have self-employment income or income from property, or both. It does not apply to companies or partnerships at the moment. But if you're a company director or a partner who also has self-employment income or income from property, then you might still be in the Making Tax Digital Club. When you join Making Tax Digital depends on your gross income. That's your total sales, your total rental income, or both, before any expenses are deducted. Some people will need to join Making Tax Digital in April 2026. Others will need to join later, and some people may choose to join voluntarily just to get ahead. But don't worry, if you should be an April 2026 starter and you have not done anything about it yet, you still have time to get organised. You should sign up now or as soon as possible and before the first Making Tax Digital deadline, which is the 7th of August 2026. Here's your action plan. Step 1. Check if Making Tax Digital applies to you. For April 2026 starters, this will depend on the gross income declared on your 2024/25 tax return. Remember, from April 2026, you must use Making Tax Digital if your gross income is over £50,000. This threshold will decrease to £30,000 for April 2027 and to £20,000 for April 2028. So, just because Making Tax Digital doesn't apply to you at the moment, it is still important to ensure that you keep checking if you meet the criteria for future years. Step 2. Check if you're exempt. some people are automatically exempt, either temporarily or permanently, and others can apply for an exemption if they are digitally excluded. Step 3. If you're not exempt, you will need to choose Making Tax Digital software and sign up for Making Tax Digital before April 2026. And don't forget, if you should be an April 2026 starter and you have not done anything about it just yet, you should sign up now or as soon as possible and before the first Making Tax Digital deadline, which is the 7th of August 2026. And step 4, start getting used to the digital record keeping now so you're not scrambling later. And this video is just the start. We've got a whole series of in-depth explainers coming up, so go ahead and make sure you hit that subscribe button to make sure you don't miss out.
Does everyone have to use Making Tax Digital?
No, only certain people with self-employment and/or property income.
Can you use HMRC's website to file your Making Tax Digital updates?
Nope. You need Making Tax Digital commercial software.
Do you have to do 5 tax returns a year?
Not exactly. You will need to do 4 quarterly updates and 1 end-of-year tax return. Think of it as 4 mini check-ins and 1 final wrap-up at the end of the tax year.
Do you need an accountant?
So an accountant is not required for Making Tax Digital. However, some people may find it helpful to have one. So remember, Making Tax Digital means digital records, quarterly reporting, and 1 final tax return at the end of the year. Same tax, just a new way of reporting. If you've got a question, worries, or just want something explained in plain English, drop a comment below and I'll try and answer it in my next video. If you want clear, simple guidance on everything Making Tax Digital, head on over to the LITRG Making Tax Digital Hub on our website. It's packed with everything you'll need to know. And remember, LITRG provides general guidance, not specific advice. If you need help with your own situation, it's important you get specific advice based on your own personal circumstances. We have a Getting Help section on our website, which explains where you can get paid and free advice about tax. Thanks for watching, and don't forget to like and subscribe for more simple tax explainers. Catch you in the next one.